Welcome to the Weekend Thesis. From the market chaos, your Sunday deep dive into the week's pivotal shifts in markets and society. Treasury Secretary Scott Bessent now balances Trump's tariff theatrics against a fragile $29 trillion Treasury market. Investors prize stability. Yet the administration's economic agenda shifts daily. Any misstep could erode faith in America's safe haven debt worldwide. On April 2nd, Trump unveiled the largest import tax package in a century, slashing stocks and bonds. The S&P 500 briefly lost $6 trillion in value, while treasuries faced a fire sale on April 9th. Bessent helped secure a 90-day tariff pause for non-retaliating nations, calming markets. He later told traders the VIX had likely peaked and ruled out recession talk. Yet the dollar has fallen more than 3% since tariffs, highlighting waning confidence. A looming summer debt ceiling fight could spark another crisis if investors balk at auctions. Bessent must reassure allies at next week's IMF meetings while satisfying an unpredictable president. Meanwhile, chip tensions sharpen across the Pacific today. US export controls now require NVIDIA to obtain licenses before shipping its HD-Quen AI chips to China. The rule, announced this week, aims to protect national and economic security. NVIDIA expects $5.5 billion in lost orders because Chinese tech giants can't take delivery. China still accounts for 13% of NVIDIA's sales, far behind the US share. Chief Executive Jensen Huang flew to Beijing, meeting trade officials and affirming commitment to the market. Washington's earlier ban on NVIDIA's powerful H100 chip already pushed Chinese firms toward alternatives. Analysts warn fresh curbs could accelerate domestic chip development by Huawei and others. NVIDIA plans up to $500 billion of US-based AI servers, a move Trump claimed vindication for. Polarized tech spheres are emerging as Washington and Beijing build rival supply chains. US officials hint future restrictions may extend to AI software services supplied to Chinese firms. Next up, brand reputations face unusual high-tech threats. A new survey of 117 global public affairs leaders ranks Musk associations and AI misuse as top brand risks. The Global Risk Advisory Council compiled the quarterly Reputation Risk Index for the Global Situation Room. Nearly 30% of respondents said aligning with Elon Musk practically guarantees harsh scrutiny. Pollsters found 60% of voters disapproved of Musk's federal workforce cuts, hammering Tesla stock. The index lists rolling back diversity, equity, and inclusion programs as the third largest reputational hazard. Anti-competitive behavior and defamation allegations round out the top 5 threats this quarter. Council Chair Isabel Guzman warned CEOs against squandering stakeholder trust during tectonic transitions. Experts argue firms must treat AI governance as routine compliance, not experimental innovation. The index will update every quarter to track emerging risks in real time. Finally, AI ambitions pivot from image to code generation. OpenAI is negotiating a $3 billion purchase of Windsurf, the coding assistant formerly known as Codeum. The acquisition would cement Sam Altman's push into full-stack software development tools. OpenAI also released Codex CLI, enabling its O3 and O4 mini models to generate code locally. Bloomberg reports OpenAI first tried to buy Cursor from AnySphere before approaching Windsurf. Competitors: Anthropic, GitHub, and AnySphere already tout powerful AI coding copilots. GitHub says 92% of US developers now rely on AI assistants for programming. OpenAI product chief Kevin Weil predicts AI will outperform humans in competitive coding this year. Industry tests show AI models solving 69% of coding challenges, up from 4% 2 years ago. Analysts warn a Windsurf deal could draw antitrust scrutiny as model makers consolidate power. Developers may applaud streamlined workflows, yet displaced coders face mounting career uncertainty. The coding race underscores how generative AI is rapidly reshaping the global labor. If you enjoyed this video, hit like, tap subscribe, and ring the bell to never miss our next market tale. Until tomorrow, watch the charts and keep your stories in motion.